All right, guys. We got non-farm payrolls today. It's a big day. Non-farm payrolls dropping early at 8:30 Eastern Standard Time this morning. I'm waking up. Let me drink some coffee and get some music going. And unemployment drops as well today. Let me see what they're expecting as it right now. I know I looked at it yesterday. Let me make sure. All right, guys. So, non-farm payroll data. It's expected. We got Powell speaking again today, too. Non-farm payroll is expected at 160. Unemployment expected at 4%. So unemployment's going down. Let me put this up. Unemployment expected at 4%. That's pretty low. All right, so we got this up on screen so you can see it too. There we go. And then we got, let me get the top banner here as well. Today we have non-farm. We got non-farm payrolls, Jerome Powell, and more today. Here, let me get some music playing. Hold on. All right, we got the top scrolling banner here. Let me get the music up. Should I do hyped up music or what kind of music should I do here today? You know, honestly, I was looking at Tesla. I hate being right. I know it's going to sound like I'm bragging or whatever it is. I hate being right about it. Like, I hate being right about this. I tell my wife this. My wife gets so mad at me. But I hate being right sometimes, the risks of Tesla is that Elon's going to get too outspoken politically. I've been saying this for, honestly, like 4 years now. That's the risk. Unfortunately, that risk ended up turning out to be correct here, and Tesla's down to 260s. I don't even know what else to say about it. He's just getting too outspoken politically. You got to understand. You got to understand if you're like the people are pretty split down the middle politically. So if you're super one-sided, it's going to discourage people from buying your products. This is just a natural consequence, I think. It's not like I'm reveling in it. I'm not really, what do you think about the Dow? Yeah, well, most of the markets are down. Bitcoin's still under 90K. The Dow, and again, I'm not saying anything politically. I'm neutral. I don't really care about any of that stuff. I do know one thing is that most people are not like me in that regard. At least it seems that way. In that most people deeply care about politics, and I don't. And so they're going to use that, and, if they're not on his side, they're going to not buy his cars. And I know that, and that's kind of what's going on right now. That's why Tesla, at least that's the sentiment that Tesla's falling down on. Like, look at Tesla down to 260s. Almost time to start averaging on Tesla for me. Yeah, I mean, I think Tesla might be okay down here. It seems kind of cheap right now. It does seem a little cheap, no? Yeah, look at Tesla testing 260s. Let's see if we got any other news coming out today. So Treasury Secretary Bessent says tariffs are a, quote, much needed course adjustment, end quote. We had the Chinese trade balance data. They came in at 170 billion, which they're a high manufacturing country, so they're going to be, producing. They're going to be exporting much more than they're importing because they're such a big manufacturing company or country. All right, so the foreign minister in China says that China's economy grew 5% last year despite pressure of unilateral U.S. sanctions. And again, I'm not really saying I agree or disagree with anything. Like, I'm just telling people the risks of selling things to consumers and getting one-sided politically. Like, there's risks, of course. I mean, there's obvious risks. I know it kind of looks like my head's floating here. Let me fix this. There we go. Does the market react? How about does payrolls? Let me think of the best question. Do non-farm payrolls show up higher or lower than the 160K expected number? Higher, lower are going to be the two options. What do you guys think? Do we come in higher or lower? Actually, there's a better question than just making it higher or lower. I think the better question here is actually, does the market want higher or lower non-farm payroll numbers? I think this is a much more interesting question. And then we got wants higher NFP and then wants lower NFP as the options here. And again, this might seem obvious, but it's not. Vote on that poll. That poll's live now. I think this is a much more interesting question, to be honest. Does the market want higher or lower NFP data? Yeah, I got you. Let me set a timer. We got about an hour and 15 minutes. So here's our timer. That's when the payrolls drop. An hour and 15 minutes. Can you hear the music? All right, let's take a look at the news that we got dropped this morning. All right, guys. So as of today, markets are experiencing slight gains in pre-market influence by the anticipation of key economic data today. And Jerome Powell, S&P closed about 0.1% higher overnight. Dow Jones 0.1%, NASDAQ 0.2%. Non-farm payrolls expected to have about 170,000 jobs in February. I'm showing 160. Let me see where else. Let me see if this number is off. Okay, I'm showing 170. I'm gonna make this neutral here at 165s. Actually, no, I'm just going to make it 170. So they're expected about 170. So again, non-farm payroll is expected at about 170. The U.S. economy is expected to have about 170,000 jobs grow in February with the unemployment rate at about 4%. However, some analysts anticipate lower figures due to adverse weather conditions and federal workforce reductions. We also have Jerome Powell set to speak at 12:30 Eastern Time, providing insights into the economy and potential monetary policy adjustments. The president also announced temporary pause on certain tariffs affecting imports from Canada and Mexico until April 2nd. This decision has introduced uncertainty in the markets, contributing to recent volatility. Bond yields, let me take a look at bond yields here. They went down a little bit after the open yesterday. Let me see what the current 10-year yields are. What the heck, bro? Like, what is this music, dude? It's supposed to be instrumentals, bro. This is the non... This is not instrumentals, bro. What happened? Okay. All right. Genres. We gotta switch. Bro, it's like not changing. Okay. Vocals. Instrumentals. I just want instrumentals, bro. There we go. Okay. There's instrumentals. All right. Moods. Sentimental. All right. Can y'all hear the music? I'm trying to make sure you guys can hear it. I just turned it up a little bit. Hey, thanks, Sam. All right, guys. Look at Nvidia. Nvidia's still at 112s. Nasdaq under 490s. Yeah, I just turned it up some. You should be able to hear it now. If you can't, let me know. I'll turn it up a little bit more. But again, taking a look at Treasury bonds. Yields, that is. Yields are down again today. They're down to 4.2%. This indicates lowering of interest rates. And we also have AVGO surging up a little bit. Broadcom. Big gap up to 198. It needed it, to be honest. Company reported strong earnings and issued robust guidance for the next quarter. Nvidia shares up 1.5% this morning. You can kind of see that on the left and middle charts. Recovering some from the previous day. We had GPS shares up 18%. I guess it's just GAP shares. After strong earnings, optimistic outlook. Yeah, we got a lot of stuff today. Massive. What's the direction of the market for you? I don't know. Don't expect. Yeah, today's the big non-farm payroll day, man. That's a big day. So Nicky Rod lost yesterday to Victor Hugo. All right, guys. So yeah, Nvidia up. Let's see what else. Apple slightly down. Google slightly green. AMD's been struggling with $100, is back down under that $99 a share. Netflix all the way down to 900s. Meta all the way down to 620s. It's a big correction, guys. I mean, the market has effectively corrected now. Microsoft at 396s. Yeah, y'all can hear the music now, right? Hey, Jeffrey, what's the difference between NFP and JOLTS? The JOLTS job opening report, they're all a little different, right? Let me see. Like, I know what it is, but I'm going to use AI here for this one. This is a rare case where I'm going to use AI, I think. It's too early for that question. All right, so both labor market indicators, JOLTS focuses on the details of job openings, hires, quits, and layoffs. NFP simply reports the net change in the number of jobs created in the non-farm sector, giving a broader picture of overall employment growth. JOLTS provides granular data on job openings, hiring, including quits and layoffs, while NFP only reports the net change in unemployment numbers, or in employment numbers. So NFP, the difference is also in the timing, right? So like NFP, I'm waiting for my AI to load here. You know, my AI also always gets stuck. Like, look at this. Like, it's literally like frozen. Like, look, I'll show it to you. Look at this. But I can tell you a little bit about what I know. So one of them, NFP is released earlier in the month and reflects current employment, versus JOLTS released later provides data from the previous month, right? So NFP is a look at current employment trends, where JOLTS is looking at historical employment trends. So like if NFP shows today's 170, and I am cheating a little bit here just for clarification. Yeah, I don't know why this won't load. If NFP shows 170, it means that 170,000 more people were employed in the non-farm sector compared to the previous month, versus JOLTS, which could show like a high number of job openings alongside a significant number of people quitting their jobs, indicating a tight labor market with high demand for workers. So it's a little bit different. I would say NFP data is a more accurate look at what the current employment labor market is. But I appreciate the donation. Thank you, brother. Question is, what is the consensus if Elon stepped down? Would Tesla rocket or tank? I really don't know, man. I think, and again, I'm not saying, like, people get so wrapped up politically because Elon's made himself so political here. And I really am neutral with most of this stuff, right? Like, I'm very neutral with all of this, right? Like but I do think he's made himself incredibly political, and I think that can benefit him in some ways, but that can also cause problems. I think most of these guys like jump from whoever has power. You see Mark Zuckerberg pivot and say, "Oh, we support the current administration now." He said that in the last earnings call. That's wildly different than he was before. So they're just waiting for whoever to get power and then jumping on that bandwagon. And I get it, but I think Elon is a little different. I think Elon has been really political for years now, and I think we're starting to see it reflected in purchases, and now especially the stock price at this point. And again, I'm not saying I agree or disagree with it. I just think it's risky. It's a risky move. People are pretty split politically, so if you really get super heavy on one side, people might stop buying your stuff, But you also might get more people buying your stuff on the other side. I don't know. I don't know what the net effect of that's going to be long term. We'll have to see. Yeah, let me pull up Discord. Yeah, so I actually did see this one already, Pawn. So the biggest Tesla bull on Wall Street says the sell-off over his politics is overdone. Wedbush analyst says a gut check moment is here for Tesla enthusiasts. Investors are, and this I'm kind of paraphrasing from an article about Tesla here. It says investors are missing big value in Tesla stock and blowing out of proportion. This is what they're saying. The negative impact of CEO Elon Musk's involvement in politics. That's according to Wedbush team led by Dan Ives, who carries the highest 12-month price target for Tesla among analysts at $550 a share. Tesla now at $260 a share. And again, I said this earlier. I'm not bragging, but I hate being right sometimes. I thought the biggest risks for Elon and Tesla were his outspoken aspect of his presence online, the outspoken aspect of his presence online. I think that's the biggest risk for it, and I think that risk is showing up now. And again, I've been saying this for freaking years. For years, that's the biggest risk. If you're selling things to consumers, you can't be super one-sided politically. It just doesn't work. People are gonna stop buying your stuff. It's too divisive in nature. I think you got to be neutral. I'm not even saying you don't even have to be completely neutral, but if you really start posting some of the most controversial, stuff, yeah, it's going to be a problem for sales. That's pretty obvious. I think that's very self-evident. And again, the people who I'm not attacking anything or anybody or any stock. I'm just saying it's a risky move. And yeah, I think we're seeing why now. They had a Cybertruck line at Mardi Gras? Yeah. Market will chop. All right, guys, we got 1 hour. 1 hour. We got 5:30 here already. 1 hour. We'll have thousands here when an NFP data drops. Looking at our poll here, look how split. Does the market want higher or lower non-farm payroll numbers? 49% says the market wants higher. 51% says the market wants lower. Out of almost 300 votes. Look how split we are. Vote on that poll. Let me know how you feel. I don't know what the market wants. I think the market wants higher payrolls. I think the market fears economic weakness now in the landscape of everything going on. I think the market fears economic weakness on it. Considering the correction the market's done over the last couple weeks, I think it's reasonable and logical to think the market fears a correction now. All right, so the China Commerce Minister urges the U.S. to correct wrong practices, view and handle its own drug problem objectively and rationally, and not blindly shift the blame, end quote. He said the U.S. imposition of 20% tariffs on China on grounds of drugs is groundless, typically acts as protectionism, unilateralism, and bullying, end quote. This is from Newswire. Yeah, unemployment expected to show up at a pretty low number at 4%, guys. 4%. That's pretty low. Last time it was 4.3, I think. So unemployment at 4% is pretty low. It's not. Oh, actually, this is what we showed up at last time at 4%. Actually, so we're actually just mirroring what we showed last time. My bad. I thought we were at 4.2 or 4.3%. Yeah. Again, people say we're in a recession. This number kind of shows we're not. Doesn't mean we're not headed towards one, but people say we're in a recession. This number kind of shows we're not. So. All right, guys. Payrolls. All right, look, we got 111 for NVIDIA. And NVIDIA is also kind of leading the market here. Who, Clinton? John, I won't take your advice, but what are you expecting from Powell today? I think it might be a really important event. I'm not expecting too much. Being real, like, I'm not expecting too much from this. We'll see. But I'm not really expecting a ton from this report. From Powell, that is. Payroll is obviously huge. Powell, I'm streaming it. I'm going to stream it all live here like we always do. But I don't know if it's going to be some type of big market influence. We'll see. We'll have to wait and see. What's up, Jonathan? Towers, Blaze, Healing, Messi. All right. Powell won't rattle the markets. Yeah, I think Powell's going to be data dependent, wait and see approach. See what he does regarding everything going on. Like, we'll see. Yeah, I don't think he's going to do too much here. Like, if we look at the... Yeah, so again, Powell's going to be speaking in about 5 hours. He's going to address the 18th Annual U.S. Monetary Policy Report, or Policy Forum, on Friday, hours after Nonfarm Payrolls. Scheduled to begin his keynote address at 12:30 Eastern Time, and then take questions from moderators. But his first remarks are going to be prepped It is his final opportunity to provide some public context on how policymakers are weighing the shifting economic landscape, including significant trade policy updates, persistent inflation, and waning consumer sentiment. Federal Open Market Committee is set to meet on the 19th this month, so it's a big, we'll see. I don't know what I don't think he's going to say much. I think he's going to be very careful, very data dependent in what he says, but who knows? Let's see if they change these rate expectations here. Yeah, so these are kind of going down. We're about 90-10 right now for rates. So about a 10% chance that we cut this month in a couple weeks, or in a week and a half, and about a yeah. So here's the rates. We got a 10% chance of a pause, or no, I'm sorry, a 10% chance of a cut, and 90% chance of a pause in rates. We also have Bowman and Fed President Williams speaking. Yeah, so U.S. employment numbers are scheduled to be released 4 hours before Powell. So it might be a volatile day with payroll numbers. Again, I don't know what the market wants here either. I don't know if the market wants higher payrolls or lower. For the past 4 weeks, 5 weeks, 6 weeks, or really for the last 3 months, I would say the market feared inflation going into some of this stuff. I would say it's kind of pivoted over the last 2 or 3 weeks, though. So the last 2 or 3 weeks, the market has kind of pivoted back since, if we look at the QQQ as an example here, right? So if we take a look at a 20-day chart, you can kind of see this correction started mid-February. And so the correction that we're in right now started mid-February. This right here is making the market fear economic weakness, like recessions and depressions, right? This big correction is making people fearful, and when the market's fearful, they tend to want economic growth and strength to stabilize things. Again, I'm not saying that's what it is today, but that's what my guess is that it depends on, to be honest, it depends, right? It's all dependent on how big the payroll show up as. If the payroll show up shockingly high, over 250, that's still going to make the market panic, I think. But I think if the payrolls show up slightly hotter than expected, we might get positive reactions. But this is something that it's so difficult to gauge what really happens here. I really genuinely don't know. Just again, if payrolls show up shockingly high, 250, 225, 250, that might make the market panic. But I think the prelim payroll numbers that we got on Wednesday showed weaker. We showed 50% roughly less than expected Wednesday. We showed 70K versus 140K, 150K expected. And so we showed really weak numbers. And the market went down, I think, on that report. And so the question is, does today's payroll numbers pour fire on this latest pour gas on this latest correction fire? Or does payroll numbers show a happiness? Does the market want economic strength? I really don't freaking know. And again, we got our poll pretty set. All right, guys. Yeah, so we got the U.S., and this is all at the 2025 Monetary Policy Forum. NFP should come in slowly under the expectations, and the gross wage should not be anything higher. That's the happiness outcome. Yeah. I don't know. I don't know if it's under. I think the market fears recessions. What's up, Ride? What's up, Smart? Caution. What do you think about the USA not buying more Bitcoin reserves? Well, I think there's a lot of fear right now. Yeah, I don't know what the market wants right now. I think the market kind of fears recession, so in that regard, they want higher payrolls, but I might be wrong. It could be the exact opposite. This is something where it's hard to figure out what the market's going to want at any specific time. Markets will V-shape recovery, maybe. Yeah, we'll see. Yeah, we got 45 minutes left, almost an hour still, so. Jerome Powell speaking. Yeah, so they said the critical issues today. See, I click this. The launch keynote presented by Jerome Powell. So the Monetary Policy Forum is going to be live right now. It's going to be live soon. Yeah, look at NVIDIA still dip. So NVIDIA is almost flat on the day leading into payrolls. We still got less than an hour, though, so it's still relevant. But let's see if it'll let me open this at the same time. Yeah, so this is massive, guys. Look at NVIDIA still dipped down to 1105s. Microsoft down. And again, the big story today is non-farm payrolls. Tariff fears still looming, dragging the market down, although some of them are a little bit more. Let me leave this. We'll have time to sign into this. Let me get out of that one, too. So, yeah, taking a look at everything here. Let's take a look. Hold on. Where's my AI system? There it is. So again, a couple things here. This is why payrolls are important. Let's hype it up for a second. All right, you guys ready? Again, so non-farm payrolls is the most anticipated report of the month, probably outside of the FOMC meeting. The FOMC meeting is on the 19th, and we're going to stream that as we always do. But with the trade war going on, like labor market fears and all that stuff, this is one of the most hyped up things in markets, right? So it drops at 8:30 in about 43 minutes. You can see on the timer. It could send stocks, bonds, dollar into big overdrive, into weakness. This report is the key indicator of U.S. job growth that the Fed and everybody else looks at. When they say a strong or weak labor market, usually they're referencing specifically the non-farm payroll report. It's the key indicator of U.S. job growth. It reveals how many new jobs were created or lost in the economy, excluding farm and government employment. I don't think it excludes government employment, though. So AI might have gotten this wrong. Let me look. So outside of non-farm payrolls, we do have government payrolls dropping here as well. Government payrolls specifically last time showed 32,000 for February. Or no, last time showed 32,000 for January. We'll see what they show up in February. All right, so yeah, NFP measures the net change in jobs across the U.S. economy, including government payrolls, but excluding farm workers, private household employees, and nonprofit. It covers private sector, government, the ADP non-farm employment change data on Wednesday, the prelim ones, only tracks private sector jobs. This report is a lot bigger. The Federal Reserve watches this closely to decide whether to cut rates, hold interest rates steady, meaning this report could reshape Federal Reserve policy and interest rates. Stronger than expected NFP numbers. Stocks could rally. Higher yields may pressure sensitive stocks that are sensitive to rate decisions. U.S. dollar could strengthen if it comes in super high, if rate hikes stay on the table. Fed might stay cautious on rate cuts if job growth remains hot. So it's really an interesting number. If it's weaker than expected, we could see drops or surges if rate cut looks more likely. Treasury yields could plunge, boosting bonds and lowering interest rates. Again, if NFP data comes in low. And this is one of the reasons I think, like, you might want to ask, like, why would lower payrolls equal positive reactions? You have to look at under the landscape of the market wants rate cuts to a certain extent. Here's bonds, right? These are bond prices, or no, these are bond yields over the past 3 weeks or so. Over the past 3 weeks or so, 3.5 weeks, these are bond yields. These move with interest rates. So these and interest rates move with each other. I'm using TNX. On TOS, it's TNX:CGI, but this is following bond yields. Bond yields and interest rates, again, follow each other. This is one of the most important correlations to understand if you want to track stuff by, like, Federal Reserve and interest rates. Bond yields and interest rates follow each other. And so during this big economic weakness, or during the big downfall, the tariffs looming, during all this tariff news, what happened to bond yields? They went down. Why? Is because these, like, bond yields and interest rates follow each other. And so if the economy's looking weak because of tariffs, what does that mean? That means the Federal Reserve is going to be more likely to cut rates versus take a restrictive stance, right? It doesn't mean that cutting rates is the most likely thing, but they're just going to be more likely to cut rates. Interest rates are more likely to go down. Doesn't mean they're likely, but they're going to be more likely to go down with economic weakness from all the tariffs, right? So you can kind of see everything that happened here, where all this economic weakness, the correction in stocks, the tariff stuff dragging everything down, including bond yields, and the market wants rate cuts. It's still pretty probable, 90-10 likelihood that we are going to pause rates on March 19th. It's very probable we're going to pause rates. It's very improbable at this point in time that we're not going to pause rates and that we're going to cut. It's super improbable that we're going to rate hike or do any type of raise in rates. And so it's pretty probable at this point in time that we're going to pause rates. But the market wants earlier cuts. The market wants rate cuts because earlier rate cuts stimulates the economy, right? The market wants lower interest rates. When interest rates are cheaper, people have cheaper access to money and loans and leverage. And so they're able to spend more, and it stimulates the economy in that regard. The consequence, though, is inflation. And so with a lot of spending, with a lot of economic stimulus, we do get worse inflation, and that's one of the correlations as well. But yeah, bond yields have gone down a little bit. Leading into this report, the prelim numbers showed up 50% lower than expected on Wednesday. They showed up at about 70K, I think. Expected was 140s, 145 or so. So about 50% less than expected for the prelim non-farm payroll data. It's called the non-farm employment change. But I do think the market wants rate cuts, and so it is a situation where we could get lower than expected numbers, and the market likes it, depending on how low. If it's super low, the market might panic, recession fears and all that stuff might get ignited. If it's super high, inflation fears are going to spike, right? So it's kind of, we need a Goldilocks situation, I think, with this specific report. And yeah, we'll see what happens. So again, NFP is different than JOLTS. It's because NFP shows the net change. So if we show up at 170K today, that means 170 new jobs were added versus the previous month. And so, again, today's shows private sector, manufacturing, services, retail, tech, etc. Government jobs, federal, state, local government jobs. It excludes farm households and nonprofits. So this is the most accurate look at labor. All signs point to market crash today. I disagree. I don't think the market's going to crash, brother. Yeah, and then next week we got CPI inflation data coming out. That's a big report too. We got to be careful about that report as well. But again, so the tariff news dragged interest rates down, bond yields down. But we've seen a spike in bond yields over the last few days since Tuesday. Wednesday, the market reacted positively. or bond yields actually went up, which is interesting. I think it's interesting because like Wednesday we had the prelim NFP data right around there, and bond yields consistently went up. I think they're just bouncing back after dropping from the tariff fears. But we are in a situation where tariff news is making everybody panic. What's your take on gold? Gold's a different animal. Gold's around lifetime highs. And so for me personally, I'm not really super interested in buying gold, and this might be the wrong thing. Like I understand it might break highs again, and I might miss out on some stuff. I'm just not interested in buying gold right now. Gold is on a 10-year uptrend. I don't really want to buy it then. I want to buy gold when it's on a 10-year downtrend. It's gold can trend for long periods of time in a specific direction, up and down. And so if gold's been uptrending for a decade, I don't really want to buy it and then have gold drop like 35% or something crazy, and then I'm dealing with a longer term correction. If you hold gold long term, though, no matter what, it's probably going to be a profitable investment if you hold it long enough. But you know, it can downtrend for 5-10 years, and I just don't want to get stuck in something like that. So for me, gold's not really an option in buying right now. I would rather hedge with other stuff. But at the same time, though, like just to give you guys like some counter arguments to my own like way of being here, is that if we do enter a recession, depression, people might hedge with gold, you know, and so, yeah, I think gold could certainly keep going higher. It's just that in terms of edge, I'm not really interested in buying it. You got to understand, like, a lot of people are really predatory telling everybody to buy gold, right? They're like, buy gold. They're always telling people to buy gold, and gold's not always the best thing to buy. Sometimes it is, right? But you got to understand the people trying to sell you these investment boxes with precious metals and like all this different stuff. Like they're looking to earn money. They're looking to sell you gold, and they understand they're going to take a little bit on top of it. So they're keeping a little bit, and they're pushing you to always buy gold. Some people are pushing like if the ish hits the fan scenario happens, you'll have gold. It's like you'll have a shiny rock, you know. I don't think it's going to be valuable if something crazy like that happens either. And so I don't know what the point of buying gold is in certain moments. I think long-term gold's going to be fine, and I like gold. I think gold's one of the most solid long-term inflation hedges. But you got to hold it for 10, 20 years to really gain like a big edge from it, because again, it can move with markets, it can move against markets, and it's been up for the last like 7 or 8 years now. So what do you think about the news? Are they going to affect market in bullish or bearish way? I don't know. I have no idea. I don't know. Even if we know which way the payrolls show up as, we don't know if the market wants higher or lower payrolls. And honestly, we're pretty split down the middle. We asked the poll here, does the market want higher or lower NFP data? 52% said higher, 48% said lower. So it kind of shows, and this is out of almost 600 votes. It shows you the split nature of this. Nobody freaking knows what the market wants right now. The market's indecisive. And I know a lot of people are going to be yelling stagflation. And I think if we show economic weakness and then high inflation next week, I'll agree with you. It does look like stagflation. And stagflation is a precursor to recessions, is what it is. So, you know, we'll see. John, I'm a beginner, and this is the first time. This is not a crash, Fabio. This is a minor correction. You got to understand, Fabio. So every year, the market generally corrects at least once. Like if we look at the last time prior to today, or prior to now, you can kind of see like generally at least once a year, the market pulls back heavy. The last one was in July of 2024. We got another one, another little baby one in February. We got another one in July of 2023, and then we had a big one obviously back here at late 2021, December of 2021 through 2022, or 2022 was basically like a straight red year. That was for the last big correction that we got was 2022. But again, this tends to happen at least once a year. It doesn't mean much yet. This is just a 10% correction at this point in time. Whether we drop, and that's why I think today's report is incredibly important, because we're kind of in that period where people don't know what to do, and if the market interprets payrolls negatively, it could cause problems right now. And so that's what I'm waiting to see. Yeah, y'all check out Beach Bum's stream at 10 a.m. on Saturdays and Sundays. Give that man a subscribe. Great swing trading content. He's in the chat right now if you want to check him out. Good channel. This happened last August. Yeah. No, all good, Fabio. You're good, brother. I'm just trying to help you understand. Like, so this is what it is. A correction is 10% drop. A crash is a 25% plus drop quickly. A bear market is a longer term trending red market, like a downward trending market, a long-term downtrending market. So those are the different definitions. There's a lot of jargon that floats around in trading and investing and finance, so it's all good, bro. Yeah, the VIX does good whenever the market... I mean, the VIX... I wouldn't really say the VIX does good, right? The VIX is gauging different things. So the VIX is gauging different things. So the VIX goes up as volatility and weakness increases. So as the market had this big correction, the VIX rises. This is a gauge of volatility. And so if you want to know like how weak things are, you can look at the VIX. If the VIX is high, it means deep weakness. If the VIX is low, it means stability and probably upward trending markets. And so again, you can kind of see the correlation with like the VIX here on the left side. And if we put the NASDAQ hourly chart up here, it's going to do the exact opposite. Yeah, like look, so here's the VIX and then here's the NASDAQ. So it's pretty similar, right? Just opposite. So NASDAQ correction, VIX rise. Yeah, all good, Beach Bum. Yeah, I mean, I'm not going to promote anybody else. It's bad. It's nothing against you, brother. It's just that, like, Beach Bum's had his channel, and him and I have worked together before, so, like, I'll give him a little plug, you know. But everybody else is just too hard, like, you know. Again, I don't like the dynamic, and I would rather just be honest with people about, like, you got people that are all nice. Like, if I've worked with you before, it's different. But you got other people that, like, are super nice when they really just want me to promote their stuff, which is fine. I get it. But it's too hard for me to vet other people and what they're doing and, like, what their channel is. And then sometimes when I don't want to promote them, they get kind of, like, weird and aggressive and, like, angry. And they turn into, like, trolls. And they act like I'm the reason they failed and that they're not doing good because John at Beginner Trading wouldn't plug me. You know, and so I usually just kind of stray away from it. You know, the other thing is, like, if somebody does exactly what I'm doing, I usually don't promote them, right? And, like, Beach Bum is, like, swing trading, good content, but it's a different niche than I am in finance. Somebody's streaming, like, I'll see people that want me to promote them and they want to collaborate with me, but they're doing literally exactly what I'm doing, and it's very obvious that they're copying off of what I'm doing. And so, you know, nobody's going to promote that if they're smart. With that said, though, the VIX is up today. So the VIX is up to $25. Bitcoin, again, still pretty weak over the last day or two. It's at 89,000 right now, though, so it's still okay. And then Apple. You know, you can see a lot of tech has been hit with these. Nvidia. Nvidia's volatile. Hey, thank you, Chewy. Yeah, promoting other channels is tough. It really is. Like, if I know the person and I've worked with them, like Beach Bum, it's great, right? But if I've never heard them before and they're just kind of like trying to get plugs from me, I usually just tell them no. And again, sometimes it does really spark this weird dynamic where if I give somebody one plug and then I don't plug somebody else, or if I don't plug them the next week, then they're mad and they're secretly, like, people get resentful really, really easily. Like, if they're trying to grow and they see me growing and they're struggling, a lot of the time people resent you, you know. It's one thing you learn is, like, people get jealous very easily. And so it's better to just kind of keep it without all that stuff. AMD bounced right at the previous closing price. And again, AMD is still under $100. But sideways. I think the whole market, one of the edges right now, I think leading into these reports is attacking choppy sideways action. John, does this correction feel worse than others in recent past? I wouldn't really say it feels best or better or worse. I think it's just somewhere. I think this is influenced by tariff news, and so like what's going to influence whether we keep correcting is tariffs, is economic updates and tariffs and news around that. That's what's going to influence all this stuff. So if tariffs come out more aggressively, less aggressively, that might influence what the market does from here on out. Payrolls is a big factor. The Federal Reserve interest rate decision in March, on March 19th, is a big factor. So there's a lot of things. CPI next week is a big factor. And so at this point in time, we're down about 10%. Whether we continue down depends on a lot of different things. And so, yeah, we'll have to wait and see. We drink the tears of bears today? Maybe. Depends on what the payroll show up as. Palantir all the way down to $79 a share. Look at PLTR here. Weak. What's going on with this? Is this bad news? And again, guys, payroll numbers. We got less than 30 minutes now. Payroll numbers, key indicator of job growth. How many new jobs were created or lost, excluding farms jobs. The Federal Reserve watches this as well. Very important. Again, at this point in time, we're expecting a pause, 90% to 10% likelihood, but we'll see if that 10% percentage jumps. If we get again, so let's break this down a little bit. The Federal Reserve influences interest rates. If things are weak in the economy, the Federal Reserve is going to have an incentive to bring interest rates lower, stimulating spending. Because when interest rates are cheap, people get more loans. They tend to spend more because now they got more money, right? And so if the Federal Reserve sees economic weakness, they're more likely to bring interest rates back down. But there needs to be the correct conditions to do it, right? The Federal Reserve is only going to do that if they think the risks to inflation spiking are, low. If they think the risks to inflation spikes are low, if they think inflation's under control and the labor market and the jobs market and the economy is weak, that's a situation where the Fed's going to be more likely to cut rates. Because one of the consequences of cutting rates is economic stimulus. When people spend more, businesses sometimes raise prices and it can contribute to higher inflation. And so for the Fed to be really dovish or really loose, less restrictive, they need inflation to be low, which is why next week's CPI inflation report is important. It precedes the Fed decision. We need inflation to be low. We also need economic weakness if the Fed wants to cut rates. And the market might want rate cuts. So we're in this really weird period where the market wants rate cuts, but it also fears economic weakness, and it also might react negatively to economic weakness. I don't know. But again, that's the situation we're in right now, where inflation is not too bad. And again, just me saying this, sometimes people are like, what are you talking about, bro? Inflation's horrible. Again, inflation, when I say inflation, I mean the rate at which it's increasing is not terrible right now in terms of inflation. So next week's inflation report is expected at, I don't know, last time it was at 3%, right? Which is a full percentage point higher than the 2% inflation target, but it's still at the lower end. The Fed looks at PCE as well, and that's at like 2.6%. And so inflation has been somewhat under control. And so now the Fed's going to put their eyes to the labor market to see if they should be cutting rates more aggressively, less aggressively, or whatever. Last year, from September to December, they cut rates a full percentage point. They did 50 basis points, which is 0.5%, and then they did 25 basis points, 0.25%, that equaled 1%. And then they paused last meeting, and they're expected to pause this meeting. They're not expected to actually raise, or they're not expected to actually cut until, see, yesterday this was at May. Now it's looking like June. Let me make sure you guys can see this. Yeah, now it's looking like June is the first time that they're going to cut. 50% likelihood that they cut in June. So, yeah, we'll see. We'll see, guys. And again, vote in the poll. We're still pretty freaking split down the middle. We still got 30 minutes left, basically. What's the relationship between tariffs and interest rates? Well, that's a little bit more nuanced. Tariffs tariffs are meant to boost U.S. manufacturing. One of the short-term consequences of tariffs, there can be a lot of consequences. There can be inflation, and there can be economic weakness from tariffs. There can be pessimism in finance and markets. And so, again, short-term, the consequence of tariffs is maybe a little inflation spikes and economic weakness as well. But it's nuanced, right? Like, so far the market has responded fearfully of the tariffs, as it should. Interest rates and bond yields have been going down since this big correction from the tariffs have started, right? And again, here's bond yields. Yields and interest rates follow each other. And so, yeah, tariffs slow the economy. Well, interest rates are going to go... the likelihood is that is. So if the economy slows, interest rates typically are going to be lower because the Federal Reserve stimulates the economy through lowering interest rates. And if the economy is weak, that's when they're more likely to stimulate it. But yeah. Yes, I have a long-term portfolio. Yeah, but you got to understand, the news is always kind of, the news has an incentive to make it seem the craziest it can be, right? And this is why so many people get wrapped up in it, especially I would say older people, because older people are the most susceptible to this type of behavior, right? Because they're watching the news more than young people, which kind of have a more... Young people look at a lot of different sources, like I know I do. I look at a lot of different sources, but I know the older population, sometimes they'll just kind of latch on to the news, and they'll watch the news, and the news has an incentive to make it seem like it's the craziest it's ever been. Last year was an election year. I hate election years. The market tends to do well during election years, like it did last year, but everything's crazy. Inflation's the worst it's ever been. The economy's in the worst it's ever been. More people told me that we were in a recession last year than I think have ever told me anything on this channel. And it's ironic because, last year we were certainly not in a recession. The news just kind of freaks people out in that way, right? The news has an incentive. They want views. How do they get views? They make people have to watch it. And how do they make people have to watch it? They make it seem it's the craziest it's ever been. I try not to be super susceptible to that, but, I think it catches everybody sometimes. But my point is, most people are unhappy now because of the inflation that we got following 2020. 2020 happened. Supply chains were disrupted. Lockdowns, all that stuff happened. During that period of time, the Fed did a bunch of economic stimulus. They did a bunch of quantitative easing. They lowered interest rates down to almost zero. They sent out stimulus checks. They did all this economic stimulus that, mixed with supply chain problems, caused inflation to spike up to 10% at this point in time. CPI inflation was almost 10%. It was 9 point something percent. That is why most people are still unhappy today, is because of the inflation spikes that we got. Really, it was at the end of 2021, beginning in 2022, the inflation that we got from that is why most people are still unhappy today, is because of that inflation. And you got to understand, inflation doesn't actually go down. Usually, the only time inflation will literally go down is if deep recession and depression, and it doesn't stay down anyway. It eventually pops back up regardless. So, we had all that economic stimulus, supply chain restraints, all that stuff that contributed to massive inflation spikes following that. And then basically the Fed started getting really restrictive because the Fed combats inflation through restriction in their monetary policy. So when we get bad inflation, the Fed will do a bunch of rate hikes. They'll raise the federal funds rate, which is the short-term rate, and it's the rate that everybody always talks about with the Fed. It's the short-term rate that the Fed uses short-term rate that banks use to lend money and hold money overnight. But eventually that rate trickles into everything else. So when the Fed raises the federal funds rate, eventually it trickles into, it directly influences adjustable rate mortgages and loans. It influences home equity lines of credit directly, and then it indirectly influences the rest of the interest rates, like auto rates across the country. the Federal Reserve saw inflation spike and they started to get really restrictive. They raised rates over and over and over again, and then they paused rates for like a year. And then we didn't cut rates until late last year. It was like August, September of last year. We finally started cutting rates back down. And again, like I said earlier, we cut rates a full percentage point from like August to December of last year. And now we're in a period where we're just kind of pausing interest rates. We're just kind of pausing rates, keeping them the same, which is kind of like a neutral outcome. And when, like, as the Fed did that, we did see inflation start to decrease, not literally decrease, but the rate at which it's growing inflation slowed. So it went from 10% growth a year down to right now we're at like 2.5%, 3%. So it is much better and it's much more under control. But again, people are still unhappy because between 2021 and now, really, prices in some places spiked 2, 3, 4x. That's why people are unhappy. And that's why there's a disconnect from me saying inflation isn't that bad right now, which what I'm referring to is the inflation rate versus the prices that people are actually paying now versus 5 years ago. And so when I say inflation's under control, people are like, what are you talking about, bro? But really, I'm talking about the rate at which it's increasing, not how much you're paying now versus then. Anyways, important conversation, but I think it takes me a little while to explain it. Hope that makes sense. It should make sense, hopefully. We got 12 minutes, 15 minutes. Yeah, well, I'm just generalizing, Rob. And so I'm not talking, I don't think it's all old people. I think some old, again, and I'm very neutral politically. I just think the way I look at it is older people typically watch the news more. And I think that's probably, like, generally true. You might have outliers where, you have people that are really tech savvy that are looking at all these different sources, but I would say generally they tend to watch the news more. All right, guys, we got 16 minutes left. Payroll's coming out soon, chat. Be ready. This should be taught in schools. Great explanation, John. Hey, thank you. I appreciate it. Yeah, it's important to understand, right? Like, once you understand, like, some of the stuff that I talk about here, the reason I teach it, and sometimes I repeat myself, is so people can understand. It's important to understand. Like, if you can understand this stuff, it becomes a little bit easier to predict things in markets, right? That's where you make your real money. That's where economists make their money a lot of the time, is being able to predict what happens. And if you start to understand this stuff, it becomes easier to predict, to be honest. Yeah, I mean, last year we didn't have two negative GDPs. GDP was at 2.5% to 3% most of the year. And so that's what I mean. We weren't in a recession last year. Oh, can you not see the timer? Oh, I'm blocking it, guys. My bad. Here you go. There's the timer. Palantir is holding. Yeah, Palantir is super weak, though. It's at under $80. More report might break it down further. When they sell all week into a major report, it zooms 9 to 10 times historically after the report. Yeah, maybe. When's quad witching pawn? It's not today, is it? It's March 21st. So that's going to be an interesting week. So the week of the 17th, we're going to have a bunch of stuff. So we're going to have NVIDIA's GTC conference. Might shake markets. On the 19th, we're going to have the Fed decision. And then on Friday, we're going to have quad witching. So we're going to have a whole gang of stuff that week. Y'all be prepared. All right, guys. Hey, we got 15 minutes. A little bit less than that. We're about 14 minutes now. Be ready here, chat. Be ready. Are there any ETFs you should check? You check as indicators. I look at like gold. I look at a lot of different things. I look at ETFs. I look at the SPY and Q. I look at like V and Q for real estate, which is the Vanguard real estate ETF. Yeah, I mean there's some. Yeah, I mean, I think people have to understand that they might have a specific situation, but that doesn't mean everybody's in that situation. Like, you might look around, and I've said this a lot over the past, like, 6 months, and I'm going to say it again. You might look around and feel like you're in a really rough spot, right? It doesn't mean we're in a recession, right? Like, you might be unhappy. And honestly, most people might be unhappy. Still doesn't mean we're in a recession, okay? A lot of people are unhappy because of inflation right now. Again, the inflation we've seen in the last 4 or 5 years, that's why people are unhappy, a lot of them, right? That's actually the opposite of a recession. We get high inflation like that from a strong labor market, not a weak labor market, all right? A recession is a weak labor market in that regard. Less people working, less people spending, GDP going negative 2 quarters consecutively. But high inflation is a different problem, not a recession problem. It's a different problem. Now, they can be precursors to different things, but again, high inflation means the economy has grown too fast, too quickly, or we've had too much economic stimulus short term. So a little bit of both is what this one was. But yeah, I'm not cool anymore. I realize that. I got a 15-year-old daughter. I realize I'm not cool anymore. They're using slang words I don't even know. How you losing 10K in profits in 3 weeks, bro? I'm guessing you were just invested into this correction. I would just be careful. All right, Chad, we got 12 minutes. 12 minutes. Oh, I believe that. Dominic says 2/3 of Americans of working age have less than 1K in savings. I understand, right? Like, people might be unhappy. Things might not be good. I'm not saying things are sunshine and rainbows right now. What I'm saying is that we don't have 2 consecutive losing GDP quarters. That's a recession. Everything else doesn't matter. Like, people love to scream, they changed the definition. 4 years ago, they love to assume they changed the definition. They're not going by the technical definition. But then modern age, they're yelling we're in a recession when we're not, And so you can't go by the definition one day and yell about it and then not go by it the other day and say we're in a recession. It just doesn't make sense. And again, right now we're just not in one. We might have inflation problems, fear, weakness, all this kind of stuff. Again, a recession's a different thing. And I think, like, especially during election years like last year, people get really wrapped up in it. And so one's job, and again, I'm neutral. One side's job is to make you think that it's the worst it's ever been. Please elect our guy. The other side's job is to make you think it's the greatest economy the world's ever seen. Cough, cough, elect our guy, right? Neither of those things are true. It's just an election year, right? They're just pulling people in different directions. I try to stay out of it. All I know is we're not in a recession. We got 10 minutes left until payroll numbers drop as well, guys. Tesla's down to 260s. We got Microsoft down to 395s. AMD is under $100. Palantir has dropped down to $80 a share basically right now. $80 a share. Bond yields finally opened up, and they opened up lower, signaling fears of economic weakness and potential lower interest rates. Look at the bond yields open up there at 4.25% right now. 4.25%. Gold's still consolidating around long-time highs. Or all-time highs at 29. What's all-time highs? 29.74. So yeah, gold's still consolidating around this level. It's basically flat. We got 9 minutes left, chat. Yeah, I mean, if we get weak payroll numbers and then high inflation next week, I'll agree we might be in stagflation. Stagflation is a recession precursor that signals high inflation but weak economy. It's called stagflation. It's a recession precursor. And again, if we get low payrolls today and high CPI next week, I can agree with that. But again, I got to wait and see. Recently, we've kind of seen the opposite, where we've seen okay payroll numbers and lower inflation data, right? But again, it's too early to tell. All right, guys, we got payrolls. Payroll data going soon. Gold's dipping down here. I'm going to put the SPY up. We're at 572s. Again, massive NFP jobs report today, guys. We got 9 minutes left. Do you like long bonds here? Well, buying bonds would basically mean the Fed's going to be more hawkish, restrictive. Like, so buying bonds here is I mean, I guess you could do that. But again, it depends on what you... It's hard to gauge. If payroll numbers show up super, like, strong, that might signal a more restrictive Fed. And so if you think payroll numbers are going to beat, yeah, I mean, do what you do. I'm not an investment professional. For me, I'm not really sure. You know, again, if you haven't already, understand CFTC 4.41, hypothetical or simulated performance. Remember, I have no idea what I'm talking about. Might be wildly wrong about anything and everything I say. Do not copy me. I'm not an investment professional, guys. We got 7 minutes left. 7 minutes, guys. 7 minutes. So 57% of people want higher. I think the market wants higher payroll numbers and economic strength. Maybe that's true. All right, guys, here we go. You guys ready? Again, 7 minutes. 7 minutes. Again, bond yields opening up lower. Again, lower bond yield signals weaker economy, lower interest rates. 6 minutes. Have you considered becoming a professional, or do you prefer what you're currently doing? I mean, I'm mostly like a media channel, though, bro. Like, people like to label me different things to justify criticism. Like, they'll label me a day trader and then, like, all this different stuff. Like, really, I'm just a media channel. I'm just covering finance. Again, we provide a value to people watching, and, you know, that's kind of what we do. Does the market go up or down, guys? Up or down? We got about 2,000 viewers here. We still got about 6 minutes left. You guys ready? Again, payrolls are big, man. Payrolls are big. Up, down. Does the market go up or down from this report? 5 minutes left. Down? Yes? Well, the VIX popped to 50 today. If I would say a situation that the market reacts negatively to is either really, really high payrolls, like 250 plus, market might panic, inflation fears, and that might make the market go down. Another one is if we get really, really low payroll numbers. Like this past Wednesday, the prelim payroll data showed up super weak. It showed up at like 70 versus 140 expected. So like 50% less than expected. So that signals some economic weakness too. We got 5 minutes left, chat. I don't think it's going to be a nothing burger. This is a big report. Unemployment expected at 4% as well, chat. Yeah, so I definitely don't think it's going to be a nothing. Payrolls is usually very volatile. We got 4 minutes left. 4 minutes. Hit the live button next to the play button. Make sure you're fully caught up on stream, chat. I appreciate it. Let's do this. Here, please stop spamming FX. Okay. I don't know if they're bots or what makes people like think that that's the right behavior. If they think that they're going to actually influence that pair, they're not very smart. They're probably just bots, realistically. All right, guys. Hey, we got 4 minutes. 4 minutes left. Whew. All right, guys. I'm going to leave bond yields up here. So I'm going to leave bond yields up. I'm curious to see what bond yields do from this report. I'm going to put the QQQ. Here's the NASDAQ futures contract. Gold on the right, and then bond yields on the left. I think that's a reasonable way to look at it. We got 3 minutes left, chat. 3 minutes. Yeah, hit the live button next to the play button to make sure you're fully caught up on stream. A lot of the time after these reports, people are like, this dude's late, bro. The report came out 5 minutes ago. And it's just because they're like lagging behind the stream. And so again, hit the live button next to the play button. Make sure you're fully caught up. We are ready here, guys. 3 minutes. 3 minutes, a little bit less than that, actually. Unemployment expected at 4%. Non-farm payrolls expected at about, I'm showing like 160, 170. Some other places have it at like 150s, though. Unemployment expected at 4%. Government payrolls showing up today as well. We also have manufacturing payrolls. We got 2 minutes, chat. 2 minutes. I mean, there's a couple different reports, Roberto. It varies depending on the analyst. Some show, again, 165. Some show I show one that says 159 and one that says 170, and so it's really somewhere in the middle. And again, I'll put it up at 165 just for balance. All right, guys. Hey, 2 minutes. 2 minutes left. Whew. All right, let's do this. Y'all be careful. All right, guys, a minute and a half left, chat. A minute and a half left. Again, y'all be safe. This is a big report. Yeah, we got almost 3,000 here. Let's see what we get. All right, guys, about 1 minute left. Hit the live button next to the play button. Make sure you're fully caught up on stream here. This timer's a little bit early. Slightly early. Again, Google's still green on the day. That's good. Here, I can put Bitcoin up. So here's Bitcoin on the right. All right, guys, here we go. 40 seconds. 40 seconds. Top 3 worst ever. All right, guys, 30 seconds. Here, I'm gonna pause this timer. It's a little bit early. 25 seconds. Really about 20 seconds left. 15 seconds. All right, here we go. 10 seconds. 9, 8, 7, 6, 5, 4, 3, 2, 1. And here's the report right now. All right, guys. So payrolls market is up on this report. Payroll showed 151, weaker than expected. I think this is probably pretty good. 151, weaker than expected. Unemployment was slightly higher at 4.1%. Non-farm payroll showed up at 151 versus 159 or 160, 170 expected. So weaker payroll data than expected. Again, sometimes the first move is the wrong move. Government payroll showed 11K, much weaker than the 44K last time. Manufacturing payrolls showed 10K positive versus 5K expected. Non-farm payroll showed up at 151 versus 170, 165 expected. So weaker than expected payrolls, but not super weak to a point where it might make the market panic, I think. So I think this is probably an okay report. Unemployment showed up higher than expected at 4.1%, chat, 4.1%. And most markets are spiking up. Bitcoin is up, gold is up, NASDAQ is up, bond yields are up, which is strange, but bond yields are higher on a weaker payroll report. I guess most people baked in a more weak with the non-farm employment numbers showing up basically 50% weaker than expected. I think maybe people priced in weaker payrolls, and so we showed up a little bit under expected, but it wasn't like a crazy amount under or anything like that. Let's put some of this data up on screen as well as in chat. But again, weaker numbers basically all the way around here. Unemployment, 4.1% versus 4% expected. Payrolls, non-farm, 151 versus 160 expected. So weaker. We'll put this all up on screen here, chat, so you guys can see it. All right, there's the data right below me. Again, markets are liking it too. Again, I thought the market might like this report because it was weaker than expected, but it wasn't so weak as to induce a panic, I think. Look at this market churn here right now, guys. Wow. Look at this pop. Gold's still green on the day. Bond yields spiked up. I don't know where they're at now, but they spiked up a little bit. NASDAQ up to 20,240 here. Bitcoin at 90.2K. So most stuff is up. AMD is green. Bond prices are going down. Like TLT is down, which is weird because like weaker payroll numbers should signal more of a need to cut rates, not raise rates. So bond yields going up is weird, but hey. Yeah, 4.1% is right around normal. Yeah, I don't know why bond yields are going higher. All right, guys, so we got some big increases here, some big strengths. Again, if you haven't already, check out TopStep. TopStep gives you a demo. They test your skill with it. If you want to learn to day trade, do not fund your own account thousands of dollars trying to learn. Most day traders lose. If you put up 10, 20, 30 grand, you're probably going to lose a lot of that. No reason to fund your own account. Instead, the futures market has no PDT rule. You don't need 25K to do it. You can day trade the S&P, the NASDAQ, the Dow, the Russell, gold, some currencies. Patterns are very similar to blue chip stock patterns. No PDT rule. And so TopStep is the most legit funded program. It's the best way for a day trader to learn. They give you a 50K demo. If you can make 3K in profit without losing 2K first, following their rules and conditions, they fund you 50K with a 90% split. And if you fail this and you lose too much and you fail, you can use a practice account with real-time data. If you were going to buy a practice account with real-time data, it'd probably cost the same. So the value's there. But if you pass that test, if you hit that profit target, which is a 3-to-2 ratio, they fund you 50K with a 90% split. 90% is pretty similar to funding your own account, but if you lose, you're out $49 is what it costs. $49 for the base one. That's the perfect mix. If limited risk, good reward, similar to funding your own account. And they pay out millions. They're the most legit funded program in the world. They paid out almost $200 million since 2020. They fund thousands of traders. Been around for over 12 years. Great way to learn. And if you use my link and go to TopStepX, there's 0 commission, so you can take small size, learn how to day trade, and it's just the right way to do it, right? No PDT rule, and futures patterns are very similar to blue chip stock patterns. If you want to check them out, I'll put the link up in the chat. Remember, all this stuff here, guys, not an investment professional. I'm not liable if you lose money. You know, top 3 worst plugs of all time ever in the world. I'm definitely biased. I get paid by them, and so I'm super biased. Some would say I'm the top 3 most biased person ever. Understand all this stuff on screen. And yeah, there's the link right there if you want to check it out. Market's starting to pull back a little bit after this pop. Maybe first move is the wrong move here. We did have weaker payroll numbers, right? We did have weaker numbers all the way around. Bond yields finally starting to correct back down a little bit. The NASDAQ starting to turn a little bit too here. Let's see if we hold over this previous closing price. You see this light blue line right here in the NASDAQ futures contract. NASDAQ at 20.174. That's the previous closing price. It's the red to green level here. So let's see if we hold. Let's see if the market holds. Are you guys ready? All right, we got Powell speaking later as well. Gold's pushing up a little bit. Bond yields are correcting to the downside here. Let's end this poll and let's ask people a different question here. So again, a lot of people said the market wants higher NFP data. We're going to do another poll with a similar question. We got almost 2,000 votes. 57% said higher. Another poll here. Does NFP data showing, what did it show, 151? Does NFP data showing 151 cause a bullish or bearish market response? Bull, bear. It's 151, right? Let me make sure. Where's my screen? Yeah, 151. And so again, vote on the poll. There's the poll live right now. Market did bounce a little bit right at this VWAP 200 EMA exponential moving average previous closing price level. Gold's still pushing up and bond yields going down. Let me see if this signals. Let me look at the Fed watch tool to see if we get any like gauge of what's going on here. Yeah, so this is still 91-10 split down the middle. Or not split down the middle. 91-10, pretty polarized still. So interesting. Market did bounce right here at this previous close. We're going to get ready to trade a little bit today, guys. We did make a little bit of money yesterday, but let's get ready. Get my funded account up here. We're going to get ready to day trade live today. I can try to put all three of these charts up here. Kind of watch everything. I guess we can keep it up like this. All right, guys. So, again, market's trying to hold. I'm going to have to document some levels underneath me here for this chart. Again, we're going to day trade live at the opening bell every day, like we always do. Market's starting to try to pop a little bit. All right. We got some levels here. We'll see if the market holds. Move that one up right there. All right, so now the market's coming back down some. I'm going to put just 3 charts up. Sorry, Bitcoin. Actually, I could probably put Bitcoin up in the middle here. Bitcoin's edging higher. Bond yields are starting to creep back up, and gold's pulling back some now. All right, we did our new poll. 61% think this is bullish. 39% think it's bearish. Interesting. Get ready. We're going to trade live at the opening bell. Stick around. We had a pretty good week this week. We are going to trade live at the opening bell. All right, so we're dipping down here. Do we buy this dip? Part of me kind of wants to. I don't know. That's a weak candle. I'm not going to buy it now for sure. Yeah, so I don't know, guys. I think we had lower payroll numbers. And so, again, if we get CPI show up high next week, you know, we might be in a stagflation situation. It's been a while since we've had a real recession. And so, you know, and we did have 2 consecutive losing GDP quarters for a small period in like 2021. But we didn't stay there. The next quarter we bounced right back. So we could call that a little mini recession, but we haven't been in like a longer term one since 2008. And so the big question is that what are we preceding that right now with some of this economic reports? I don't know. What do you guys think? Do we go into a recession this year? Maybe that should have been my question. I'm going to try shorting it. It's a little risky here, but we're going to play with it. I shouldn't really trade in pre-market, especially after some economic reports. But we'll stick to this, try to build some profit up on the day. What a retracement here. All right, so we're in 3 contracts. I'm going to take half off here and just wait. I was looking for a trend change, but it's a little too volatile for me right now. That's not bad. Hey, there we go. All right, we took half off there. Lock it in. I'll sit on the rest, see if we get a bigger breakdown here. I'm going to add a little bit more to this too. There we go. All right. Just made about $40, $50 from that trade. I will take it. Honestly, I dare to say I've been doing okay trading in pre-market. I dare to say it. You can see how similar this is to day trading stocks as well, guys. So again, if you haven't already checked out Top Step, I'll put the link up one more time. Again, there's no PDT rule. I can day trade. This is basically the QQQ price action that I'm trading. Patterns are very similar to blue chip stocks. Most pro day traders should be trading futures. A lot of Forex traders end up trading, all this stuff, but most pro traders should be trading futures, I would think, because there's less red tape, there's less restriction. Again, Top Step, it's like a souped up demo account. They give you a 50K demo. You can also get a 100K one or 150K one. They're a little bit more expensive. The base one's 50K. You make 3K without losing 2K first. Reasonable 2 to 3 ratio. You do that, they fund you 50K 90% split. If you're good enough, you can then withdraw your own money and fund your own account. But most day traders lose, and so instead of losing, I know when I got started, I deposited $5,000. I tried day trading stocks. I lost it within 3 weeks. It's a very common story, and most day traders are going to lose, right? I don't care what your favorite guru says. Most day traders lose. It's a lot cheaper to lose on Top Step. Kind of like a souped up demo account. If you pass it, you get all these cool rewards. If you fail it, it's not the end of the world, generally at least. But again, I'm biased, but I still think that's pretty freaking useful. If you want to check it out, here's the link. It does teach you how to trade too. They do let you have 50 micros, Timothy. I think you're wrong. So, Timothy, I can actually take 50 micro contracts right now on this account. Or maybe not. Yeah, I can trade micros on this account. Top Step actually has 0 commission, which I think is more encourageable for micro contracts. And on my Combine accounts, I can take a bunch of micros. So, I actually think you're wrong. I do think they let you have a bunch of micro contracts. Like, I mostly trade micros on Top Step. That's what you see me trading on today is micros. And again, the way I typically try to trade here is this. Like, you can kind of see, like, I ended up making about $1,000 the other day. The way I was able to do it is, let me find it. When did I do that? Was it Wednesday that I made all that money? Yeah. So the way I was able to do it is, I've been showing people this. So like the way I was able to do it is I built up a small cushion with micros first. So if you look here, I ended up taking like tiny size here with micros where I made $160 or whatever. You can see micro contracts. I made like $160. And then once I did that, I took larger size because I had a cushion. And then once I built up like $500 or $600, then I took even large size, made about $1,100 on Wednesday. And again, the way I did that is through scaling in with micro contracts, building that cushion, slowly increasing size. Yeah, I'm pretty sure I could do 50 micros. Yeah, on Top Step X, you can use 50 micros, I'm pretty sure. I've been using them here for a while. Look, I don't want to have to take a trade of, On Top Step X, it's 50. Yeah, well, no, I'm not using Trade Evade. I'm using Top Step X. And if that's the case, then just don't use Trade Evade. Again, I'm not telling you what to do. Do whatever you want to do. I think people miss the point, though. Like, most day traders lose, right? Top Step, been around the longest, most legit one in the world. And again, most day traders lose. And so everybody knows, like, if a day trader puts up 10K for their first day trading account, they're probably about to lose that 10K. Let's just be real here. I think giving people an option like this makes sense. But again, I'm biased, so, Yeah, I'm not sure what Payne was trying to say there. Yeah, I mean, Timothy, look, it's all good, bro. We don't have to argue about it. There's no reason to argue. It's all good. To be honest, Top Step X is what I use. So what other restrictions are on everything else doesn't matter. I mean, if anything, we were both kind of right. I was right saying you could use 50 micros, on Top Step X, But again, it's all good. It's all good, bro. All right, so we're consolidating right under that 200 exponential. We did bounce right at that 121 level. We built up a small little cushion on this account. We'll see if we can keep pushing here today. Yeah, all good, Tim. That's all good, bro. Yeah, I haven't used Tradeovate in a long time. I like Top Step X too. Top Step X is cool. Yeah, I have no freaking idea what I'm talking about. News is bearish for the dollar. Probably. I mean, weaker payrolls typically signals, the Dixie goes down. But it's not the weakest numbers. Like, this is a very close to flat report, basically. Like, basically the numbers are very, very close to flat. Yeah, I'm in a funded account. I broke my rules. That's what I'm saying. I dare to say I've been doing okay trading in pre-market. Do you really have that, Radical? Yeah, 4.1% is relatively low. People are asking about more news that comes out today. We got Williams and Bowman speaking this morning. Powell speaking at 12:30. The president speaks at 1:30. So we got a whole gang of stuff coming out. Powell is talking with the Chicago Booth School of Business. He's going to have a pre-written statement and then do a Q&A. High yield savings accounts I don't know. I don't like them. I don't like high yield savings account. I think, like, I was trying to tell my wife this, like, it's very easy to make 5% anyway. Right, you can make 5% with treasury bonds, with CDs. You can make 5% basically anywhere, CDs are useful because there's less fees and stuff like that. But you can make 5% very easily. 5% is not hard to make. You can make that basically anywhere. Once you start to go over that, it's much more difficult. Much more difficult. Yeah, gold's kind of flat now. Gold is not really moving much, which is good, I guess. We're still bouncing off of this 121 level. This looks weak too, but we're kind of choppy and sideways. We got the opening bell in 40 minutes. Yeah, the reason I like T-bill is because it's liquid. I get my little 5% annualized dividend, monthly dividend payment, and I can sell it whatever I want to sell it and get out and do whatever I want with the money. I don't get locked into something long term like I do with bonds to a certain extent and with CDs especially, I mean, to be fair though, you can sell a CD whenever you want as well, but they're much more restrictive. You got to basically sit in them long term versus other stuff where you can just buy it or sell it. Yeah, so we do see bond yields decreasing. Look at bond yields. Again, this is interest rate sentiment right here. Look at bond yields go down on the top right. This is interest rate sentiment. 4.23% for bond yields. All right, guys. So, non-farm payroll data is out. Let me do my Twitter post here. I don't think I've done my Twitter post. Again, if you want to give me a follow on Twitter every single freaking day, bro, we post. Every single day we post. Every single day we post a breakdown of everything going on in the economy. Bond prices are going up, yields are going down. And so again, let's talk about some stuff here. Payroll data showed slightly slower than expected job growth month to month. Payroll showed up at 151. I showed a lot of expectations prior to this. I showed like anywhere between 170,000 payrolls down to like 159,000 payrolls. So I showed a pretty big array of potential outcomes here. We ended up showing lower than all of them, though. We showed at 151K versus, again, anywhere between 160 and 170K expected here. The market is kind of slightly negatively reacted to this, but we're kind of flat down the middle. The data showed up right here, and we originally reacted positively and then turned all the way back down, One thing that we do see is that bond yields are interpreting this as weakness in the economy, right? So bond yields are interpreting this as weakness in the economy. How do we know bond yields are interpreting this as weakness? It's because, well, bond yields went down, and bond yields and interest rates tend to follow each other. And so if bond yields are going down, that means there's a lower interest rate sentiment. Let me know if we're lagging right now. We shouldn't be, but if we are, it's AI. It shows clean for me. Dude, freaking ChatGPT needs to fix their freaking servers, bro. I'm telling you, dude. They are freaking bad. Yeah, so I'm trying to post this news source here, chat, so just bear with me. But AI is freaking never working, bro. They really are never working. I'm like, NFP data is out. ChatGPT, update this with the recent one. TLT popping up. Again, here goes markets dropping here. Now, 20.1 is a big psychological level that I've seen the market react a lot to. 20.1. Big psychological level. The market tends to respond drastically to that level for whatever reason. Again, y'all hit that subscribe button. Hit the notification bell, guys. I appreciate it. We got Jerome Powell speaking later on this today. Bro, AI freaking sucks, bro. ChatGPT freaking sucks, dude. Like, they genuinely, like it's, like, unusable right now. Like, dude, I got freaking tons of RAM. I got a freaking I got an i7, tons of RAM. Good graphics chip. Like, everything that should make this computer run flawlessly. But, and this is only ChatGPT. Like, ChatGPT is terrible. Absolutely terrible. Hey, bud. How you doing, man? Love you, buddy. Have a good day, dude. Love you, bud. All right, bye. With that said, though, ChatGPT, horrible, guys. Horrible. It lags constantly. It never freaking works, bro. It never freaking works. Like, I gotta find another option. Market's flushing down, though. We're going to get our X post live. Just bear with me. I waited to do it so we could have the payroll report. Like, it's ironic because, like, I have it send me these reports. Like, okay, here we go. I'm going to have to just copy. All right, I got it. I'm going to have to just send this to... Okay, there we go. All right. Yeah, so again, we're going to post this to our x.com page. It's a full breakdown of everything going on in finance right now. If you want to give me a follow, it's at Beginner Trades, at Beginner Trades. Again, payrolls, non-farm payrolls came out. Yeah, payroll showed up at 151 versus 160K roughly expected. Again, we do have Powell speaking at 12:30 today. It's a pretty big thing. We'll see. I don't know if it's going to influence markets at all. But again, if you want like a one-stop shop breakdown every single day of all the big news in finance, give me a follow at Beginner Trades. I'm getting ready to post the latest update that includes payrolls right now. And so again, here's that post. If you want to give me a follow on x.com, we do this every single day. We post it at least once. There's the link right there if you want to check it out. Sorry, Paul, I'm going to delete that one so I can post this one here. And again, if you want to check out the post, it kind of breaks down everything going on in finance, economics, stock news, payroll news, tariff news, all that stuff going on. There's the link right there if you want to check it out. Great way to help support the channel. All right, guys, let's get ready. Let's get ready. Look at the market flush down here. And so will this ignite a deeper correction now, guys? Where's the low of the last few days? Okay, so the low, we're edging close to it, guys. We're about to break the lows of the last long time. So again, we're edging closer. So the lows of the last 20,000 is the level. 20,000. Look at that psychological level here. 20,000 is the low. Almost 20,000 even is this low. So that's a big psychological level. This level right here, 20,000 on the NASDAQ is the low. When was the last time we hit this? Yeah, 20,000 is the low of the last 4 or 5 months. 20,000. We haven't been under 20,000 in 4 or 5 months since we really broke over it and had a deeper correction back in July of last year. So we're testing that level now. 20K. I kind of want to short this, guys. I'm going to short this. It's kind of a risky position. And I don't really like doing this, but I'm going to add to it here. I think we're too close to this to not tap it at least once. 20,000. But maybe I'm wrong. We'll take a little bit larger of a risk here. I don't mind. I took half off to protect it. I just didn't. It was taking a little bit too long here. So kind of flat. Took a little bit more off too. So we're still slightly red on the day now, but we got ourselves in a better spot that I can hold a little bit longer. And if I lose, it's not the end of the world. I want to give it a chance to hold like longer term through this. And then I think I'm just going to add to it if it goes in my favor. There we go. All right, there we go. We're in 4 contracts now. I want to take some size. We're too close to this low. I think we're going to end up breaking it, but a rare risk trade for me in pre-market. But I think the conditions right now are a little different here, to be honest. Don't copy me, not an investment professional. I have no freaking idea what I'm talking about, guys. Do not copy me. I might need to remove at least one here. Somehow we got out green on that position. I don't know how. I don't mind losing a little bit, guys. We're up big on the week. And I like the trade, to be honest. I got in a little bit late, but it's okay. We're going to keep 3 contracts. I like 3 contract size. I think that's fine. We got 28 minutes into the opening bell. All right, there's the first burst. There we go. All right, we took a piece off there just to protect it, and then we're going to hold the rest. And we'll try to add to it if it goes in my favor. And we're in 3 contracts. I hate it when my support levels work. Look at that level. It bounced literally directly off of it. The only thing that might throw a wrench in this is Jerome Powell speaking later. It's still a very small trade, so like we can play around with this trade, and if we lose, we're okay. But Jerome Powell speaking later, I just don't want to get stuck in like choppiness. Appreciate everybody that gave me a follow on X. All right, so we're pretty close to cutting it. What a rip. We're just going to cut it now. Boo. We lost. We're down like $100. It's all right. Not really happy about it, but we'll switch a different account so we don't end up losing too much per account. Wait, Powell's not speaking right now. Is he supposed to speak at 12:30? I mean, I have a stop loss. I'm just using a mental stop. You know, I'm watching it. If I was walking away, I'd set a stop loss. But with my hand over the sell button, I don't think I need to sell a physical stop. It doesn't really mean too much. I like the trade, too. It just didn't work out. Like, some trades are just not going to work out, and that's okay. Yeah, he's speaking at 12:30. We're going to stream the whole thing live like we always do. Yeah, I mean, I don't really like shorting bottoms either. But I think when we get close to these lows down here, I think we're going to break it eventually. And so I think the closer we get to it, it's kind of like a magnet. So as we get closer to 20,000, I think it's going to drag us down closer in momentum. People are going to start getting nervous, and they're going to start selling a really obvious bottom like this. The exact bottom would be 20K. I shorted above this. I wouldn't actually short it right at the exact number. But yeah, it's usually not a trade I'll take. But I still think we're going to break 20K. And so it just depends on how confident I am in that. And there's going to be variance, so I could obviously be wrong. We're still up a big amount on the week. We made 1,100 on Wednesday, so we can lose $100. I think we'll be all right. It's not a long stream, and we're going to stream until the opening bell at least. So we still got 25 minutes. All right, I'm going to short one contract here. I'm breaking my rules trading in pre-market, but I'm going to take one, and we're going to take a very small trade in pre-market. Maybe I'm getting stuck too much to a thesis, but I don't hate the idea. And if it goes in my favor, we'll add to it. The question is, when do we break that level, though, if we do break it? Yep. All right, we just took half off, just locked in about $40. Yeah, so here's the flush that we wanted the whole time. Yeah, here it goes. See if we can add a little bit more to it. Got a pretty big cushion now. I'm gonna take another half off just to protect it even more. And now we'll see what we do on the rest. This is our risk right here too, this 2100 level. I'll let it test it, so we'll give it to like 2105 or so, but that's my risk in this type of thing. I think we're gonna crack that low. I think we're too close, but I might be wrong. Not an investment professional, of course. I don't want to get too stubborn with it though. Yeah, I'm definitely breaking my rules. But I like the edge. Again, there's certain times where I think it's justifiable. And I think I would have been right if I would have held through it. I think my problem with the trade is that I made it my stop too tight, is what it was. I just did a little bit too tight of a stop. I don't want to get stuck in that, so I took half off. We'll leave our little one contract. Dixie's going down. Other stocks are starting to pull back too, but hey, thank you, Dan. All right, we took another half off. All right, so we basically just made all the money back we lost, so we're kind of flat. But we would have, just to put this into perspective, you know, people criticizing, oh, shorting at the lows or whatever. This is what we thought would happen. Again, my risk on the first trade was just a little bit too tight. But again, we're so close to 20K. As we get closer to that number, you got to think about the psychology behind it. Like, people are going to lose confidence as we get closer to that 20K level. I think it's pretty probable that we're going to end up breaking down sometime today under 20K. I could always be freaking wrong though, right? Anything could happen, but I think it makes sense psychologically where you start to get closer and closer to this big psychological level right here. As we start to break down, people lose confidence, they sell. That causes more breakdowns. As we get closer, more people lose confidence, they sell, and eventually we do break down. And I think the only thing that could, like I said earlier, throw a wrench in that type of trade is Jerome Powell speaking later on today. I think Jerome Powell speaking on later on, if he says some really optimistic and happy things, big money might recognize that and they might take it a specific way or whatever. So nothing's 100%. There's always variance. Hey, brother, can you provide your outlook on data? What data? Next week we got CPI. Again, I don't really know what it's going to be. I'm going to wait until next week to figure out what I think it's going to be. I'm using paid GPT. Yeah, I got paid plus. I'm going to have to switch these headphones out. And as we break down, I should have held that first trade. I would have been loving life right now. Dude, I don't know what's up with these headphones. Sorry if the music got turned up. Let me know if the music's too loud right now. All right, we're getting very close to that 20K level. All right, so I do want to put this account up just to show you guys this right now. We are scalping this move back down, and this is the first trade that we got into. We'll go ahead and cut the rest right there. So we ended up just making a lot of it back. I don't know. We're still slightly red on the day, but I do think this is going to keep coming down. I'll add a little bit more here. I know it's shorting right at the lows. I think this is like a freaking magnet, though. And so as we get closer to that, I'll try to take some micro contracts and some more risk, but there we go. There we go. 2 contracts now. There we go. All right, so again, we're kind of slowly scalping that. We are now effectively green on the day. We're up almost 70 on one and down a little bit on this one. But we're more reasonable now. And again, this is the breakdown that I was talking about the whole time. Like, y'all have to think about the psychology behind it. We'll put our other one up that we're actually nicely green on. And so I know, like, shorting at the low might seem like a bad strategy, but I think you got to take context into it and think about, like, big levels and what this all means. Yeah, and again, I told you guys I thought we would at least test this low. Again, the psychology makes sense. Now, whatever we do now, but the psychology makes sense. You have to think about the psychology of pressure. And so as we get closer, people lose confidence, they sell. At this point, though, we broke down. So it's also possible we do something like this where we go down and then we go back up and then we do this and then make another test of it. Like, that's all very possible. Nobody knows. It's all variance. I can fix your chat GPT and just explain it in the chat, bro. Yeah, so now we're popping up a little bit. Again, I'm just going to wait. We got to bounce back. Again, Jerome Powell might throw a wrench in things too. See the flush. Let's see if Jerome Powell's supposed to speak on the economy. The big thing is going to be the Q&A. Like, he might say some stuff. We don't know what he's going to say or how that's going to look, though, but Yeah, so again, we're still sitting tight at this middle range. On the other account, we actually got ourselves very close to green. All right, so we got ourselves green on our other account now too. I'll show you guys the trades we got. And again, betting on the same sentiment, the same price action. Let me see where we ended up. The last few trades we got all basically flat. But we did build up a nice little cushion here in this one. So we got ourselves green on both accounts now. Attacking this neutral. Like you can kind of see the green on this one now too. And then here's the other one I've been trading on this morning, which we are effectively green on this one as well. So green on both. I still think we're going to break down under 20K. We got 12 minutes left, chat. 12 minutes. I still think we're going to break down under 20K. Powell is at 12:30 Eastern time today. Yo, what are y'all talking about? That's why I don't celebrate all the bulls quiet now. Yeah, I mean, honestly, Kay, I've been pretty bearish for 2 months now. I haven't bought anything. I told people I thought the market would correct. And so far, that's been proven right. I don't know if it's going to keep correcting, though. I think it all depends on a lot of stuff. I think if inflation spikes next week, stagflation is going to be ringing in the finance streets. And so I think we just got to be careful right now. If your favorite network offered you a career, would you take it? You would have to sell. No. They would have to pay me a big sum of money. Like, a job isn't worth this. Like, they'd have to pay me millions, you know, to give up the rights to this, because beginner trading is certainly worth millions, you know. I mean, that might seem kind of outlandish to a lot of people. I get it. But just based off of how much it makes, they're going to have to pay. You know, I'm not going to just, like, a job doesn't mean anything, you know. I could lose a job tomorrow. I'm not going to lose my job tomorrow. My son will probably take over this channel one day when he gets old enough to, in a few years. But yeah. I need to write a script, but I can't stop procrastinating here. Listen, that's what we're here for, brother. I don't know, Larry. I really don't know if that's going to be big or not. Isn't that value based on you? Yeah, for sure. I've tried to hire other people to run my channel for me, right? What I figure out very quickly, and I'm not even trying to, like, brag here, but, like, what I figure out very quickly is, like, I can have somebody else try to run it. Viewership every time I tried historically, viewership went down like 50%. And so if it was somebody else and not me, for whatever reason, you know, viewership would just drop. And so, yeah. Doesn't mean I couldn't sell it. I'm not really trying to sell it. I understand, like, it's the value of this channel is mostly based off of me. But with that said, though, that also means that, like, I could have the same value on any channel, you know? So, like, I don't know. Yeah. Is massive independent income better than decent pay with benefits? Yes. Yeah. Of course it is. Again, that's that corporate, like, do you really think it's better to work for somebody else because of benefits? Like, dude, like, I can create my own 401k if I want, you know? Like, that's silly. I think people get talked into, like, shilling for corporate stuff way more. And I think confirmation bias, people want to believe that somehow their job is more valuable than, like, a business. And I think it's just obviously not the same. I think corporate's cool and all, but, like, there's no reliability there. Like, you can get fired freaking tomorrow. That doesn't mean anything, right? Like, I'd much rather run my own stuff and control it, and it's up to me, and make more money than I would at a corporate job, than work at a corporate job for, so yeah, I mean, it's just not something I really want. But everybody's different. Maybe it's confirmation bias in my own mind, because I want to believe that what I'm doing is more valuable than working a corporate job. That's possible too, of course. All right, so we're kind of consolidating. Hey, we got 7 minutes left. 7 minutes. Yeah, honestly, I used to work. I've worked a lot of jobs, right? When I quit and started my own business is when I found much more happiness. Like, I remember working at a job, right? And I used to manage benefits for people. I would manage health benefits for United Airlines and some other companies. But my department was United Airlines, so I'd manage benefits for United Airlines. I'd set people up and do all this different stuff, right? And I remember I went there and I was a temp out of a group of 70 people, and I remember I scored the highest on my placements. I scored 100. I was the only person out of that group of 60 to score 100% on my placement exam, and then also get it within I was also in the top 5% on actually how I interacted with customers, and did a whole bunch of stuff. And this was years and years ago, right? But this is what discouraged me from corporate work. And so I was at the top of everything. But people who were friends with management would get jobs over me. And so the politics of it I didn't like. And so people that were friends with management would get promoted out of temp work and get a full-time position, but they would keep stringing me along. I was the only person that they kept as a temp. They fired. They would go around basically tapping people on the shoulder, letting them go. It was literally Survivor for a little while, and they just didn't fire me. So I was the only person that I know of that they kept on, but they didn't want to give me benefits, and they didn't want to up me because they only had a limited amount of space, and basically friends of management got those positions. It just was super political and what I considered unfair. And so I remember I missed a day for something. My kid was sick or something, so I had to miss a day. And I had 5 days left that I could miss because I didn't miss much work, but the manager was kind of a hard ass, and she would get weird and basically, and so one day I just kind of quit. I was just you know what, I'm gonna go do something else. And she called me apologizing and begging me to come back. And honestly, I look back on this point in my life, it would have sucked if I would have agreed and gone back. If I would have actually gone back and worked there, I'm pretty sure I'd be really unhappy right now. Really, really unhappy if I had actually gone back and done it. And so yeah, it was just not for me. Maybe I'm hard to work with. That's possible too. I'm sure a lot of people would agree with that. But yeah, I'm just glad I didn't go back because, basically I was at home. We had a bunch of stuff going on. I had to figure out a way to make money from home. Carol had to have some surgeries and some stuff that I'd rather not get into. And so, yeah, I had to figure out a way to make money from home. And that's kind of when I started all this different stuff. And if I would have gone back, it would have been miserable. Hey, we got 4 minutes left. 4 minutes, chat. Yeah, and I'm just in a much better situation where I make more than most people now talking about stocks for 4 hours. That's a beautiful thing. I'm very lucky. I got a great community. Most of you guys are really cool and supportive and genuinely cool. And I provide value. I'm here. I'm trying to help. But yeah, I don't know. It wasn't for me. What do you mean trading company, Robert? Yeah, Powell speaking at 12:30. Yeah, for sure. D, 100%. Medical interpreter. That's cool.
I'm definitely streaming Powell, the jobs conference. I don't know. And look, here we are. We're still breaking down, as I said we would. And again, these are the type of like theses you like that can really make people money. They got me green on both accounts on the day with both theses in mind. And again, it's not a shocking one. Like, look, guys, like it's very simple. As we get closer to big milestone levels, like right here, 20,000. 20,000. Think about the milestone level of this, 20K even. Everybody's watching that specific level. That's the lows of the last like 4 months as well. And so 20K is the lows of the last 4 months. And so as we get closer and closer to this, again, I've explained this about 4 times now, but I hope it makes sense to people. As we get closer and closer, this level becomes like a magnet. People lose confidence the closer we get to it. And so once we get really close like we are now, it's pretty probable that we're going to tap it at least. Maybe not. It's also possible we don't, but I think that's a big, profound edge that, you know, like I usually don't trade in pre-market, but I think this time was a little bit different and justifiable to take those trades. Yeah, I mean, working for other people is not fun. Yeah, the cool thing is that like I can go on vacation here and bring my work with me wherever I go. Like I went to Disney World earlier this year, and I could just bring my laptop. I bring my laptop, bring my mic, bring my camera, and work whenever I want. As long as I can get up early, my work, like I could stream until, as long as earnings season or Powell isn't speaking or something like that, I can get up and I can stream and I can be done for like 10 o'clock and do whatever I want to do. And so that's very useful. We're right around 20K now. We'll see how close we get. We got less than 5 seconds left until the opening bell. I think we're going to tap this at the open most likely, but who knows? All right, there's the bell. I'm talking about the broad market indices, Hall. All right, guys, so again, there's the opening bell. We haven't really got a big move yet. I'm watching a lot of stuff. So here's the thing, like markets are down a lot too. We're right around 20K. It's also possible this level holds as support, but I think we're gonna at least tap it. But who knows? Maybe I'm wrong. Maybe it rips up in my face here. But again, I've already made my money short, so I am gonna be short biased though, as long as we're close to this. And again, I'm not an investment professional. Don't copy me, guys. Great stream today. Thank you, man. Appreciate it. Yeah, being a parent's good, Lolo. Like I hear some people that are like, oh, I don't want kids. And I get it. Like people can live the life they want to live. I'm not mad at that at all. I know for me personally, and again, I'm going to wait 5 minutes to trade. I'm not taking anything until 5 minutes passes. I know for me personally, kids helped me kind of get my mind right. Like I was kind of a slacker before I had kids. And so having kids young and you know, like it helped me get my mind right and kind of like do better. But everybody's different. Nvidia pop it up. Yeah, a little bit. It's just the opening bell. It's still rangy here. I still think we're going to crack this 20K level, but I might be wrong. I think we're too close to it not to. It's kind of like walking by a person that you know and not saying anything. Oh man, I'm sorry to hear that, Hayden. That's tough, dude. Yeah, I mean, owning your own business, it depends, right? Business, it depends. It depends on what kind of business, to be honest. A lot of businesses are tough. I know somebody that ran a remediation company, and like he did work on my house and all this stuff. He's basically struggling right now because he got sued by some lady that's just trying to take advantage like take advantage of him. Just doesn't feel like paying. Did a big, huge job, and they just don't feel like paying. And so I think especially when businesses are young, it's really easy to ignore. It's really easy to avoid doing things that you shouldn't do because you're desperate for customers, right? But yeah, you got to do that stuff. You got to vet people. Alright guys, so we're starting to pop up. Alright, we're about 4 minutes into the open. Yeah, and if I would have kept that job as a... Thinking about it now, right? If I would have gone back to that job after she apologized and asked me to come back, I would have... I don't even think that stuff's around anymore. I think AI is basically taking over all that stuff now. I think AI is going to replace all of it anyway. And so I don't know if it would have been a good spend... Like, if it would have been justifiable to spend my time there. Alright, we got this resistance level. I'm really tempted to short into it, too. We're basically flat on this account, but we'll try it. Let's take one contract here. We'll add to it, see if we flush down. I'm gonna take half off here just to protect it. And now we can be a little bit looser with this. A little too close to the open. Oh, there's a flush. Wow. Sheesh. Alright, we somehow ended up green there. Take some more here. Maybe add up to this level. Oof, what a retracement. This is the opening bell where it gets you. Sheesh. Alright, so we're red now on this one. Actually, this one wasn't that bad, so we're hitting that 200 exponential. Bond yield starting to spike back up too. I'll wait. We're going to try to take some trades here. Let's see if we can catch it. There we go. Alright, so we basically made our money back. We're flat in this account on the day. Here's that breakdown here. If we get a big retracement, I'll short it too. But we need a big one. There we go. Alright, just made another little $40 bill. I'll take that. Attacking this breakdown here. Yeah. Yeah, and I think modern age, guys, like there's no excuse to like, okay, I think there's so many ways to make money now where you don't have to necessarily work some like mind-numbing corporate job. I don't think you need to do any of that stuff now. I think there's lots of ways now where you don't even have to work a corporate job anymore, where you can basically just work for yourself. There's a lot of ways. All right, so here's that breakdown. I still think we're gonna hit 20K. Nvidia's starting to turn. We're at like a quadruple bottom here though. So I still think we're gonna break 20K, but I'm gonna wait a second and see what happens. So there's a pop. I'll short it, but I want to keep one contract here. Try to take a longer term. My daughter's calling me. Take 2 contracts here. Hello? Hey. Oh, well, you gotta tell me, Manny, before you try to spend it. Yeah, you at the airport? Okay. Hold on. Okay, hold on. All right, I'm gonna send you some right now. How much you need? Okay, you at the airport, you said? Okay, all right, I love you. Okay, I'll see you later. Okay, all right, I'm sending it right now, so give me like 2 minutes and I'll send it. All right, I love you. Bye. It's my kid asking me for money. She keeps one of my credit cards so she can just buy whatever, but she's on a trip right now, so. Kids, man. I tell her, I'm like, hey, if you spend like she must have been spending money. I put $300 on this card yesterday. I guess she's at the airport. That's freaking expensive. All right, so it looks like we got out of our short just in time because the market's popping up here. Tesla's starting to rebound. All right, let's see what's going on. Any big news coming out right now? Let's see. UK court has dismissed a case from lawmakers versus the FCA over banks. Mexico economy minister believes around 85 to 90% of the trade from Mexico to U.S. could be eligible to fall under USMCA requirements. Estimates around 10 to 12% of COS could have difficulties complying with USMCA and will work in the coming 3 weeks to help them comply. White House economic advisor Hassett says tariffs will be more broader than just on autos, according to Bloomberg TV. The president said, quote, I am strongly considering large-scale banking sanctions and tariffs on Russia until a ceasefire and final settlement agreement on peace is reached. To Russia and Ukraine get to the table right now, end quote. She's on vacation though, so she's on like a trip, so she usually doesn't spend that much, but apparently airports are expensive, and the airports are expensive. You buy a bottle of water, it's like $10. All right, guys, so we're green on the day. Let me see what we're green. Yeah, we're green on the day everywhere. We push up some more. I'm gonna short this. It's kind of a risky short, but hey, we'll play with it. We got a cushion already on the day, so let's see if we get a big retracement down here. There we go. All right, there we go. That's easy. So far, so good. Up about 100 on this one, slightly up on the other one. Yeah, she's a good kid, though. She really is. Like, she's had friend problems lately, and, like, you know, Um, yeah. A lot of drama. Kids are just mean, bro. Girls are just mean, dude. And they get jealous really easy, and like that jealousy makes them just be cruel and mean. And then like it just kind of sparks nonsense, to be honest. But she's genuinely a good kid, like caring, like empathetic. All right, guys, market's still bouncing back. With kids, you just want to make sure they have empathy, you know. And I think if you're raised by the wrong parents, you're not going to have empathy, right? Like with kids, you just want to raise them to have empathy towards people and beings in general. And if you're raised by the wrong parents, you're not going to have empathy. They're going to act like you're always right and everybody else is always wrong, and that you didn't do anything wrong and the other person's always wrong, right? Where it's like, I know I've had a conversation with both my children about, hey, like, don't be what's wrong in the world, right? Like, if you do something wrong, admit you're wrong, right? Like, if you, like, don't go around being mean to people, being cruel to people, making fun of people. Like, be kind and, like, put goodness out into the world. Don't be crappy. And luckily, both my kids are empathetic and just pretty good kids. I'm not saying they're perfect, for sure. They certainly make mistakes, but my daughter cries when she looks at baby pictures of my son, and so that's good. I'd rather her cry too much than too little and be like a crazy person, you know. Anyways. It's probably worse to deal with somebody who doesn't know they're wrong. Yeah, and again, you know how it goes. Like, you got some parents that just, like, don't parent, right? Like, they don't discipline. Like, that's the biggest problem. You got to discipline your kids. If you don't discipline them, dude, they're never going to think they're wrong. And, like, if you don't ever... I guess it's like this, right? You got kids who go around bullying other kids, right? If I hear my kids are bullying other kids, bro, I'm going to freaking... Like, dude, I'm not going to agree with my kids just because they're my kids. Like, I'm going to get onto them, and they're going to have consequences. Like, I'm going to take stuff away. I'm going to tell them no TV, no video games. You got other parents that just don't parent. They're just off doing other stuff, who basically they're going to act like their kid's always right. And, like, that's a toxic situation. Like, that's breeding narcissism. And so it's just important to parent your kids. John's Parenting Tips 101. You're welcome, guys. I should start charging y'all for this. Anyways... Market's still bouncing back, held at the 200 exponential. Part of me is tempted to short. A lot of it's going to depend on tech, though. Meta's bouncing back, it's green. Google's bouncing back, it's green. Tesla's finally bouncing back, and it needed that bounce back because Tesla was super weak. A lot of tech stocks trying. But I am tempted to short this just because it is a continuation of a bearish trend. I appreciate it, Anto. Thank you, brother. If you do something wrong, you need to own up to it. Yeah, for sure. Like I've dealt with other people too, and it's like a weird dynamic. Like, some people are gonna defend people they know or their family no matter what, right? Because it's their friends or family, even though like there's so many red flags against them, you know. I don't know. When I deal with somebody, it's like, can they admit they're wrong? You know, can they apologize? Some people can't apologize. They never apologize. I mean, most day traders lose. It doesn't mean all day traders lose. Yeah, I'm kind of in this point where I don't know what to do. I made a good bit of money today, but like, I don't know. Tesla rip it up to 266. AMD at 99.6. Nvidia at 113s. Yeah, I mean, I'm scalping mostly, but I'll build up a profit cushion on the day first. Things are looking a lot more bullish now. Yields are rising, which means interest rate sentiment is rising. I'm going to short this. A little risky, but it's all good. I'll take another contract here too and see how this goes. I'm going to take half off here. And just protect it and then add to it if it goes in my favor. There we go. All right, cool. So we just made like 40 bucks there, give or take. You'd love to see it. 11 minutes. Again, if you want to day trade with me on Top Step gives you a demo. They test your skill with it. You pass the test, they fund you. You fail, you only lose what you pay for it. In this case, base one's 49 bucks. It's not the end of the world. It's a great way to learn. It's a great situation to learn to day trade. Most day traders lose. You put up your own money, you're probably going to lose. This is a cheaper way, souped up demo account kind of thing where they give you a 50K demo. You can make 3K in profit without losing 2K. If you do that, they fund you 50K with a 90% split as long as you follow their rules. And that's a 2 to 3 reasonable ratio. In the futures market, you can day trade the S&P, the Dow, the NASDAQ, the Russell, gold. Patterns are very similar to blue chip stocks, some currencies as well. Most pro day traders in Forex and all this stuff should be trading futures because there's no PDT rule and less red tape. And again, Top Step is kind of like a middle ground where if you pass the test, you get a 90% split. You get to keep your first 10K. That's pretty similar to funding your own account, but if you fail, the base one's 49 bucks. And you get a practice account afterwards with real-time data if you fail. So the value's there. They paid out almost $200 million. If you want to help support the channel, again, they're my main sponsor and affiliate. There's the link right there if you want to check it out. I'll put the link up in chat. Understand CFTC 4.41 hypothetical or simulated performance have limitations, guys. Not an investment professional. I do lose. Sometimes I lose off stream. You're not going to see it. Don't claim anything. Don't guarantee anything. I'm not an investment professional, guys. You can trade futures. So you can basically trade the QQQ price action, the S&P 500 price action, the NASDAQ price action, the Dow price action, the Russell price action, gold, commodities. Oh, I failed a bunch of times, Courtney, more than I can count. But I've been promoting them for 5 years, so I mean, I'm going to fail a lot of them. Closest thing those type of people say is, I'm sorry you feel that way. Yeah, I think it depends on how you're raised. I really do. Like, I've grown up around some people who, like, it's almost like you go to a restaurant and it's a competition to see how mean you can be to the server. You know, how little of a tip can you justify? To where they're like battling other people like over who could be the meanest to the server, and like, it just depends on how you're raised. Like, I used to work as a bartender. That's a hard job. Server's a hard job. Waiting's a hard job. It's not easy. People are mean. And so I usually just try to be nice regardless of how the service is. Most of the time, if service is bad, it's not even their fault. Just kitchen slow or whatever it is. So I can't judge. Markets still push it up. I mean, failing is you have to have context into it, Courtney. She said, okay, So me failing isn't bad. You got to think about it like this. You could either lose that $49 or you could lose 10K you funded into your own account. Which one's worse? You know, that's like anytime you're frustrated with losing on like a funded account program, you got to take that context into it because it might make you appreciate that loss a little bit more. All right, we're still heading up. Look at this resistance level though. So I don't know if the market's optimistic with Powell coming in today. Since we had lower payrolls, they think Powell's going to be like hawkish, or they think Powell's going to be dovish. I mean, try to save us from weak economy data. I use market orders. Everybody's different though. Who does that? I know some people that have done that, that behave in that very similar way. That's why when I raise my kids, like, kids watch how you are, you know. Like, you can tell them whatever you want, but they're gonna emulate how you behave. Like, watch people's behaviors over what they say. And so you can tell them to be nice to people, but if they see you being mean to people, it doesn't matter. Powell's on at 12:30 Eastern Standard Time. Nvidia's breaking highs again too, so we are pushing up. We got this isolated high up there at 2075s or so. And Nvidia got up to 113.50s. Netflix is creeping up. Tesla's very flat though. It's kind of stagnating here, so I kind of am short biased. I doubt he'll talk about crypto. He might. I'm not sure. Meta started to dip down. It's at 630s. AMD breaking down. It's at 99s. Microsoft breaking down. It's at 393s. Tesla breaking down now. So we're seeing some pullbacks here. I still think that 20,000 level is like the elephant in the room. If market keeps flushing down, I think that's a risk. All right, guys. So All right, so we are flushing down some here. I don't know what to do. I'm already up a good bit. I'm also going to be trading on Top Step TV later. This is Christmas music. All right, guys. We still got like 1,000 people here, which is pretty cool. Appreciate you guys joining me for payrolls today. Again, next week we got CPI inflation data, which is big. I don't think we got anything else going out today, huh? We got Powell speaking later, of course. Non-farm payrolls, unemployment showed up at 4.1%. NFP showed 151. Government payroll showed 11,000. This is down from 44,000 last time. And Powell speaking at 12:30. The president speaking at 1:30. Yeah, so look, there's the come down here. Things are looking weak now. Look at this. All right, so the White House economic advisor Hassett says they will see a bigger hit on government employment in the next reports. President says the head of the United Auto Workers of America just stated that tariffs are necessary to correct years of abuse of the USA by other countries and companies. We have lost 90,000 factories and plants since the beginning of NAFTA. End quote. Again, this is the president quoting. Not saying I agree with this. I'm just quoting him. Basically saying tariffs are necessary. And again, we got Powell speaking later. We're going to be streaming that live like we always do. How you guys doing? You guys green or red today? I'm green. We've been reading the market fairly well. I think this looks bad too, so part of me wants to really short this, but I think I'll wait. But I do kind of want to short it. Look at a pop. Yeah, so we're up about 125. We made a little bit more on our other account too. Yeah, if you want to check out our Discord, it's completely free. It doesn't cost anything here. Have I posted it today? I don't think I did. Doesn't cost a penny. If you want to check it out, here is our Discord right here. And yeah, guys, I'm going to get out of here. Again, if you want to check out Top Step, link is in the description. Great way to learn how to day trade it. Our funded accounts we're up decent. We've had pretty good accuracy today so far. We will be back later on today, guys, for Jerome Powell speaking later on today. We are also going to be on Top Step TV starting at 11 o'clock. 11 o'clock Top Step TV. Yeah, hey, I love you all. Y'all have a great day. Again, day trade with me on Top Step if you want. Link is in the description. Remember, guys, as always, not an investment professional, not liable if you lose. Always make your own assessment. Trade responsibly. Understand CFTC 4.41. Sometimes I do trade off stream. Sometimes I lose off stream and you don't know about it, guys. I do trade off stream. You're not going to see all my trades. I'm not an investment professional. Top 3 worst trader ever today, guys. With that said, though, good luck. Hey, I love you all. Again, if you want to get around the PDT rule, you can check out Top Step. They're an affiliate of mine. I'm biased, though. I'll see you guys later. Y'all be good. Have a great day. We'll see you guys in a couple hours for Jerome Powell.